I think the amount of inflation that the Federal Reserve is going to unleash in order to try to counteract this financial crisis. I mean, people are still reluctant to call it a financial crisis. That's exactly what it is, except it's bigger in scale and it's going to be far more impactful than the 2008 crisis. And it's probably going to result in even more aggressive and reckless monetary and fiscal policy. And this time, it's going to take the dollar's reserve status down with it. So I think that's going to really complicate things here in the U.S. because that's going to send inflation much, much higher and American standards of living much lower. There's always a risk for every country that issues a fiat currency. Hyperinflation is always a risk. The question is, how high is the probability? Because not all risks end up to fruition. So we could avoid it. But I think the risk is a lot higher now than it's ever been. And in order to avoid that outcome, it's going to require some very difficult political decisions and choices that need to be made to avert that outcome. But I think even if we manage to avoid hyperinflation, something like Zimbabwe or, Weimar Republic, Germany, some of the really big examples where, you need wheelbarrows full of money, to buy a pack of gum or something like that. It's a possibility. It's hard to handicap how high a probability, but I do think that we're going to have very high inflation for many years to come. I mean, elevated double-digit inflation, and where the first digit may not be a 1, it could be larger than a 1. Right. So it's going to be very substantial inflation, even if it doesn't technically qualify as hyperinflation. But that's not, ruled out. So you have to be vigilant and be prepared because that worst case scenario may in fact be the scenario that ends up playing out. Thanks to the Fed's policies, as well as government regulation and the moral hazards that it creates, the entire banking system is completely insolvent, including the too big to fail banks. All those banks would fail if the government stepped out of the way. But the reason our financial system is so vulnerable and so leveraged and insolvent is because of government. And now you have politicians trying to claim that the problems for Silicon Valley Bank or Signature Bank were the result of a lack of regulation or of deregulation, when in fact the opposite is true. It was excessive regulation that is the reason that the banks got into this predicament in the first place. And of course, without the Fed holding interest rates so low for so long, they wouldn't have even been able to have loaded up their balance sheet with all this debt. But all the banks have done this. I mean, think about the mortgage market. How many Americans over the last, 5 or 10 years have successfully refinanced their mortgages to have rates in the 3s? That is a huge gain for the borrower, but that comes at an enormous loss for the lender, who is now stuck with that low-yielding paper in a much higher and rising interest rate environment. So all the banks are going to lose a fortune as a result of owning these mortgages, and they will fail unless the governments bail them out by creating more inflation, which is ultimately how the bailouts are paid for. In fact, the Fed has already returned to quantitative easing, whether they want to call it that or not, but the balance sheet is up about $400 billion since this financial crisis began. And it's going to get a lot bigger in order for the Fed to postpone the pain of the crisis and socialize it into a different form of pain, which will be higher prices, because that is what's the substitute. So on the one hand, the government says, don't worry about your bank account, we're going to guarantee it. But on the other hand, you now have to worry about the value of the money that's deposited in your bank, because even though the bank might not fail and you won't lose your money, when you go to spend your money, you won't be able to buy very much because your money is going to lose its purchasing power. There's no question that just like there's going to be a run on the banks, meaning people are trying to get their money out of the banks, they're going to be running to put it into gold, because no money is safe now in the bank, because either your bank is going to fail and you will lose your money, or your bank won't fail because the government bails it out and your money will lose its purchasing power. So either way, you should withdraw your money now, but don't stick it under your mattress because it's going to lose purchasing power there too. You've got to convert it to real money. You've got to turn it into gold. Now, if banks could offer you a high enough rate of interest to offset the inflation, then that might be an incentive to leave the money in the bank. But the banks can't do that because they can't afford it, because they're broke, because they've already locked up all their deposits in long-term, low-yielding mortgages and treasuries. So they can't pay you enough to offset the loss of inflation, but they can't stop you from withdrawing your money. The problem is they don't have the money because the money has been lost. That's what happened to Silicon Valley Bank or Signature Bank. So as more people rush to withdraw their money from banks and use it to buy gold, the Federal Reserve is going to have to print more money to enable those withdrawals, which is going to create even more inflation, which is going to accelerate the appeal of gold and cause even more people to deplete their bank accounts to buy gold. And then it's a vicious circle of, collapsing banks and runaway inflation. We will absolutely return to a gold standard. I mean, a gold standard has been the monetary system that has dominated through most of recorded human history. And I don't think that that's changed. I think we've temporarily experimented with fiat currency. The experiment is going to end in disaster, and it will prompt a return to what works, and that is gold. And whether it's governments or the private sector that lead the way, ultimately that's where we're going to go. And we don't need governments to remonetize gold. The private sector can do it all by itself. In fact, gold was money in the private sector before it became money in the public sector. It became money for the kings because that was the money that everybody wanted. That was, if you wanted to pay your guards, you needed to pay them in money that they could use to buy food. And the farmer wanted gold. And so that's what the kings collected in taxes. They collected gold so they could pay their soldiers. But I think what would happen now is private enterprises, private businesses, whether it's a bank or any other institution, doesn't even have to be a financial institution, but it has to be capable of holding custody of gold. It can then digitize, tokenize that gold, put it on a blockchain or other form, and allow individuals to own those tokens and then transact in them on the internet instantaneously for a low cost. They can price goods and services in grams of gold. They can pay for and be paid in grams of gold, and gold can circulate easily around the globe as money, as a unit of account, as a medium of exchange, and as a store of value. And so I think we're headed in that direction. As far as what the Chinese may do, to the extent that they may decide that they want to back their currency by gold, make it redeemable into gold, I think that would be a very prudent move on their part. If they're interested in having the dominant currency in the world, that would be a way to secure that position. I mean, the power has been shifting for quite some time. And if you look at the relationship between the United States and China, China is clearly the rising power and we are the declining power. China enjoys an enormous trade surplus with the United States. China has the industrial capacity that we lack, that we lost over the years. So the real production and wealth creation is taking place over there. And all we're doing is buying what they produce and borrowing the money they save to pay for it. So I think we have this phony economy that has been propped up by inflation and cheap debt, and it's in the process of collapsing. And when the dollar loses its reserve status, that'll be the final nail in the coffin. And I think the American standard of living is going to plunge because the dollar is going to collapse and prices are going to soar. And we're not going to be able to import what the rest of the world produces. Now, the rest of the world, if they don't export their production to the United States, well, they're going to have more for themselves. So Americans are going to have to make do with less, but the rest of the world is going to suddenly find that they have a lot more. And so while our standard of living goes down outside the United States, particularly in the emerging markets, the standards of living are going to go way up. You could be a complete moron, but you could figure out where you should open up a bank account. They would have consumer reports. They would rate banks. They'd say, hey, these are the safe banks. You want to put money in a bank? Trust this one. Or maybe you can look and see where smarter people are putting their money, right? Where's the smart money banking, right? It would be very easy for the free market to figure this out. For somebody to pretend that they're capitalism and then say that capitalism doesn't work in banking, it works with everything else, but the American people are too dumb to figure out where to put their money, so we're going to put the government in charge? What, the government's not any smarter. In fact, they're dumber. See, here's the problem. When individuals are trying to figure out where to put their money, it's their money. They got skin in the game. The reason that nobody does any homework is nobody cares, because that's the moral hazard of the FDIC. The government says, we got you covered. But if there was no FDIC, individuals would do a much better job of finding a safe place for their own money, where they bear the consequences if they do a bad job, than a bureaucrat. Some faceless bureaucrat who doesn't even know who you are, and none of it is his money. He can be incompetent, he can be bribed, who knows? But it's ridiculous to believe that we need the government to protect us. We need protection from government. That's what we need. That's why we're supposed to have a constitution, right? That's enforced to limit the power of government, and we're supposed to be on real money. We're not supposed to have a Federal Reserve or a central bank and all this fiat money. We're supposed to have gold. We're supposed to have honest, real money. And if we did that, we wouldn't have any of these problems. All the European banks pretty much got beaten up, most of them hitting 52-week lows. Although year to date, the banks in Europe are down a lot less than the banks in the United States, right? So our problems are far more advanced. But there's a contagion here because all these banks are doing business with one another, and they all have everybody else's liabilities as their assets on their books. So there's a lot of contagion, right? That's how the financial crisis went global in 2008, and it's going global now. See, the big difference, though, is I think the government is going to react quicker than it did then as far as opening up the spigots, right? Even though inflation's a problem. Now, it's possible that I'm wrong, and that maybe the central bankers have finally figured out the errors of their ways, and they're not going to go and do quantitative easing, even though they're already doing it. Because what they're doing by bailing out these banks and swapping treasuries and mortgage-backed securities for newly created dollars, that is QE. I don't care what you call it, it's exactly the same thing. The Federal Reserve takes government debt and mortgage-backed securities onto its balance sheet and replaces it with cash that it creates out of thin air, right? Because where does the Federal Reserve get the money? I mean, not from its operating income, because it doesn't have any. The Federal Reserve is losing a fortune. So you have a bank that is losing money, bailing out other banks that are losing money. Where's it getting the money? It's printing it. It's creating inflation, right? They don't want to acknowledge that it's QE, and they also don't want to call it a bailout, right? The two things they're doing, they don't want to admit. They don't want to say that they're bailing anybody out, because they are, but the public doesn't like bailouts. And I think the public doesn't really like QE anymore, so they don't want to call it QE. But they're doing that. They're bailing out everybody, but they don't want to call it a bailout. They're doing QE, but they don't want to call it QE, but that's what it is. And the result, of course, is going to be inflation. And that's the big difference, because inflation is already running at 6%. We're in the middle of a financial crisis. Now, inflation is not going away, because that was never going to happen. There was no way these rate hikes were going to bring the inflation rate down, but the Fed was able to pretend that was going to happen, as long as it could pretend the economy could withstand the medicine. But it couldn't. The medicine has already killed it. Now, the disease is going to kill it also. So the Fed is damned if it does and damned if it doesn't. But, they tried to preserve what credibility they had. They already look foolish, because last week they told Congress, or Powell told Congress, everything is great, the economy is in great shape, and we were a week away from a financial crisis. The Federal Reserve regulates all these banks, right? Apparently, you had all these morons running one of the biggest banks in the country with this upside-down mortgage-backed portfolio, treasury portfolio. You had guys from the Federal Reserve working at Silicon Valley Bank, yet they didn't know about this? That should show you how incompetent these guys are. If they didn't know about this, what else don't they know about that's right underneath their nose? So they already look pretty foolish based on what they said. But if they then try to save face by going a quarter point, I mean, Powell kind of got the market ready a week ago for a half point, right? That's why gold sold off. That's why the dollar went up, because we were going to get a half point rate hike, because we had a super strong economy with a red hot labor market, right? No problem. Well, now that we're in a financial crisis and we're having to bail out banks, right? What does that tell you about this so-called strong economy? We don't have one. It was an illusion, which was exactly what I've been saying the entire time. Again, I have been saying that it's impossible for the Fed to fight inflation without creating a financial crisis. I said it's not just a matter of whether or not we're going to have a recession. That's a sure thing. We're going to have something way worse than a recession, because we're going to have a financial crisis. One of the great opportunities is to buy the gold stock. Unbelievable. Gold was one of the few things that was up today. At one point, it was up over $30 an ounce. But when it was up over $30 an ounce, the GDX and the GDXJ were negative. And they closed negative on the day. You had a few stocks, Newmont Mining, one of the big gainers, of the day. But most of the stocks were down, even when gold was on its high. Why? Well, the dollar was very strong today, because the new problems, the new bombshells were dropped in Europe. And so there was a flight to the dollar although there was a bigger flight to gold because gold went up even in dollar terms, but it really went up in euro terms, in Swiss franc, in yen, in pound terms. The dollar index was up about a full point on the day. Let me take a look at where it closed, up 1.136. We're back at 104.73. Now, I don't think the dollar is going to hold these gains, but the gains on the day, I think, hurt gold stocks. But they should have just followed the gold price up. They didn't. Investors are still gun shy about pulling the trigger on gold stocks. Oil was way down today. That's bullish for gold stocks because oil is a big part of the cost of a gold mining company. So the price of the gold they're mining went up, and the cost of the oil they need to mine it went down. Plus, the dollar went up. A lot of these companies, their wages are in foreign currencies. They're not in dollars. So their labor costs went down. This was a fundamentally very bullish day for the gold stocks. But if you understand the big picture, we are close to massive breakout in inflation, right? I've been saying from the beginning, the way this thing ends, the end game is runaway inflation, soaring inflation, worst case scenario, hyperinflation. This is the best possible thing for gold. Gold is very close to a major surge. That is going to be the difference, I believe, between the 2008 financial crisis, where gold initially sold off, and the 2023 financial crisis, where it's just going to take off. The question is, how many more days do we have before it explodes upward? Because inflation is a problem now. It wasn't a problem back then. Yes, prices started to rise, the CPI started to inch up, but nobody was really concerned much about inflation. And of course, the minute the financial crisis happened, the dollar soared. I mean, not a little bit of a rise, because the dollar index back in August of 2008, dollar index was down at around 70. It was near its all-time record low, or at the time, yeah, that was an all-time record low. The dollar is near highs now. The crisis is starting when the dollar is high, not low, and it's likely to sell off. Gold in 2008, when gold was at about 1,000, it had gone up from under 300. Gold had tripled. Gold was at the peak of a big bull market. Now, gold has just finished a 10-year consolidation. Gold is not overbought. If anything, it's oversold and underowned. So the circumstances for gold and the dollar are very different entering the 2023 crisis than they were entering the 2008 crisis. Gold and the dollar are more similar to where they were in 2000 when the NASDAQ bubble popped. That's when gold was under 300, and that's when the dollar index was up at 120. And that's when we had the big drop in the dollar and the big rise in gold. So what's going to be different is inflation. And everybody still thinks that the recession is going to cure inflation. They don't realize that it's going to be the catalyst to make it worse. The dollar is going to go down this time, gold's going to go up, so it's going to look different than the 2008 financial crisis in how some of the markets react, some of the currencies and precious metals and various investments. And I know that during the 2008 financial crisis, initially people following my advice lost a lot of money. We actually lost a little bit more money than people who were just in the U.S. stock market, because in 2008, the second half of 2008, foreign stocks actually went down more than U.S. stocks because the dollar went up so much. Now, my stocks rebounded a lot more in 2009 than the U.S. market did, in part because the dollar turned around and started to sell off. But the initial reaction was bigger losses abroad. That's not going to happen this time, in my opinion. In fact, year to date, the foreign markets are holding up better than the U.S. market already early in the crisis. And even though the dollar was up today, it's not going up. It kind of stopped going up. In fact, it's still on a downtrend. And gold is rising. It's not falling with the stock market. It is rising. Yes, gold stocks aren't rising, but they will. People are still reluctant to buy because they still don't believe or don't get what's going on. I'm the one that has credibility on this, whether they want to acknowledge it or not. And a lot of the stuff that I said, I saw, I don't know, it was the Young Turks or somebody, did a video, and they were like just really making fun of me because I came out and said people should buy gold. And they said, look at this idiot Schiff telling people to buy gold. How long has he been saying buy gold? Like, why? Because I was saying that your bank deposits aren't safe, which they're not, because inflation is going to destroy their value. And so I'm saying, hey, pull out your money from all the banks, even the ones where the government is guaranteeing the full amount, because the guarantee doesn't matter, because they only guarantee that you get your money. The government doesn't guarantee you that the money will have any value when you get it. You're just going to get the money. Whether or not you can buy anything with it, well, they got no control over that. So if you want to have some safety as to your ability to buy something with your money, then you don't want it in fiat currency at a bank, no matter how many government guarantees you got. You want to have real money. You want to have gold. Again, you want to buy some gold, call up Schiff Gold. Again, a lot of people say, hey, Schiff, if you like gold so much, why are you selling it? I'm not selling any of my gold. My gold ain't for sale. I'm helping you buy other people's gold. Schiff Gold buys wholesale and then sells retail. So we're not selling our own gold, right? We're selling you somebody else's gold who's dumb enough to sell it. Now, I don't know how much longer people who have gold are going to be dumb enough to sell it. They're going to want to buy more too. And then the price is going to go way up. But the real opportunity, if you want to hit a home run, obviously you got to risk striking out, right? No guarantees. But if you want to go for the home run, don't just buy gold. Buy the gold and silver mining stocks. They were giving these things away today. Hard to believe that they were down. They'll probably still be down tomorrow. You have more time to buy the individual stocks, buy the Euro-Pacific Gold Fund, read the prospectus, make sure that you can handle the risks, right? No pain, no gain. I mean, there are some risks here, but you got to decide, right? Because I'm comfortable with the risk, because I'm sure that I'm right. Now, I could be wrong. It's possible, right? Anything is possible, but I doubt it. And I think if you go back in time and look at the things that I've been saying over the years, just about everything that I've been predicting has either already happened, is in the process of happening, or is likely to happen. And all the things that everybody else said couldn't happen have either happened, are in the process of happening, or are about to happen, right? So I think I have a lot of credibility. And so I think if you're going to bet on somebody, I think betting on me makes a lot more sense.